So we'll get going. So let's crack on. Let's get straight into it. So St James's Place organisation. We're a vertically integrated company. So what we essentially do is we provide the advice side of things, which is provided by Bellamy Wealth Management in this instance. We provide the product, which could be your typical ISA, pension, maybe investment bond wrapper. And then at the other end of that, we also provide the individual funds. So St James's Place essentially creates 42 of its own individual funds. And one of the main reasons that we do that is because what we're trying to do is essentially take the whole of market approach to fund management by taking the best quality that's out there in terms of the types of funds that you need, and also in terms of investment managers, and really bring that down into a good proportion of funds which cover the right asset classes and have the best fund managers managing those funds. So just from a structural point of view, there's some really key benefits to doing what we do in terms of creating your own funds. And the first one of those is mandate customization. What mandate customization gives you is it doesn't just give you a really good risk management tool, i.e. you can essentially ensure that certain managers that you hire to manage your funds don't invest in certain areas that you don't want them to. But it also gives you the option to really integrate things like ESG, so environmental, social and governance awareness into your funds. And it also enables you to invest in areas where there may not be funds like that out in the market. So the fund that I would refer to in our space would be our diversified assets funds, which actually invests in private markets. So it invests in things that essentially are not listed on a stock exchange. So by doing that, having your own funds, there's lots of advantages to doing so. Now, what we do from an investment manager point of view is we essentially outsource the management of our funds to global managers around the world. But the beauty of doing that is that we essentially become whole of market from a fund management point of view, i.e. we can work with any manager we want to around the world in theory. Now, the big advantage there is there's a lot of managers around the world, investment managers, who do not offer UK funds. Okay, so they don't want to necessarily go through the regulatory rigmarole of setting up a UK structure. And essentially what we do is we bring their strategy into our individual fund. Now, what we'll do over time is we will monitor that, which I'll talk a little bit more about in a minute, over time. And essentially what we've got the power to do with the way the funds are set up is keeping it quite simple. If we're unhappy or we need to change that fund manager at quite short notice, then we've got the power to remove that fund manager and bring in another one. And I'll touch a little bit more about that process shortly. Given the way SJP is structured, and given we essentially have very, very good inflows into our business, and our clients and our philosophy is about long-term investing. So to give you an idea, our average client holding period is 14 years. What it enables us to do is it really enables us to negotiate lower fees with these fund managers that we are, that we are getting onto our panel to manage our individual funds. So fund managers want money that's going to stay there for a long time, for the long term, because that's our philosophy and that's the sort of fund managers we use, long-term investors. And if fund managers can have that and they have consistent flows into those funds, it means that there's a big advantage for them, or it's easier for them to manage those funds. So what we can really do is make savings for our clients, given that structure. And what we also do is ongoing through the year, we're constantly reviewing our fund managers to ensure that we're trying to drive down what we call external management charge, the fee that gets paid to the manager over time. And then the final thing that's really advantageous to having your own funds is the 13,000 securities that we hold amongst those 42 funds. We know every single security that we hold. Whereas if you maybe compare that to the IFA world, the independent financial advisor world, they're picking their individual funds from the vast market of funds that are out there, and they're not necessarily going to have the transparency of what's in those funds. which can be a bit of an issue when you come to construct a portfolio of funds in things like overlap, proliferation, etc. You know, the same strategies that the advisor doesn't actually realize are next to each other. So in terms of actually monitoring those fund managers, what we do is we have an approach which we name select, monitor, change. And to keep this quite high level, we're going out looking for global fund managers. That might be big investment houses that you've heard of. It might be small boutique investment houses. What we're really looking to do is attract the best talent to manage our funds. That's really what we're looking to do. And we don't just do that by ourselves. What we do is we have access to external consultants, because when we're selecting managers, we want a certain level of objectivity. Yeah, we want an opinion that is not commercially essentially aligned to SJP. It gives us the raw, hard opinion and data of, is this a good fund manager? So consultants that we use, because of our size and our scale, usually only work with big institutional investors. But they work with us, and our clients see the benefit of that because of the size and scale of St James's Place. Those consultants and an in-house team helps monitor those individual fund managers on an ongoing basis, and that scrutiny is very, very deep. I'm not going into too much detail. You know, we get daily trading reports or daily holdings reports of everything that's in there, so we know everything that's going on in those funds, and we're constantly monitoring, talking to, and essentially managing those fund managers is what we're essentially doing there. Finally, if we feel we need to make a change, we will, but you'll note the word appropriate there. Have to make a change for the right reasons. Yeah. So I mentioned earlier, we're very long-term investors. So, you know, if there's just a short-term performance issue, it may be down to nothing the fund manager is doing. They're sticking to their process. That strategy could potentially be out of favor in the market at that given individual time. Now, that change does not just mean change fund manager. It also means changes to funds. So I mentioned earlier about having quality and not necessarily quantity. And the reason I say that is because what we will also do to our funds over time is, if we have a certain type of fund, so for example, last year we changed a fund called our Global Equity Income Fund. We changed it, a complete strategy change, because we didn't want to take that approach anymore. And we wanted to take a value approach, an area that we were feeling we were a bit underweight in our fund range. We completely morphed the fund from one to another. So that change piece also means adaptation and change of the fund as a whole as well. So that's what SJP do. Very, very high level, quick run through of our approach. And now I really want to focus on what's going on in markets, or what has been going on in markets, and how our approach really caters to dealing with those issues.
Neil, I think you've got you've got the next slide coming up. So if you can try and just move on to the showing the slide.
That's fine. So that's my fault. What I'll do is I'll stop share and go back.
I was just thinking, with some of the slides coming up, they'll be very small.
Yeah, no, that's fine. Is that any better?
Just loading. Yes, that's exactly right. Thanks.
Is that what we're looking for?
Yep, that's all good. Thanks, Neil.
Okay, perfect. Sounds good to me. Okay. So essentially, we'll move on to the next slide. So